Welcome to the Deep Dive, your shortcut to getting smart, fast. We sift through the sources so you don't have to.
That's the idea.
Today, we are plunging into Pioneer Power Solutions, that's ticker PPSI, and their Q2 2025 earnings call.
Right.
Our mission, as always, is to cut through the noise, pull out what really matters, and help you understand what's driving this company, especially after, well, a bit of a roller coaster reaction in the market.
Yeah, that market reaction was definitely something. Because look, Pioneer, this quarter, they didn't just meet expectations, they pretty much blew past them.
Okay, let's start there then. The results snapshot. Pioneer Power Solutions had a strong Q2 2025. They beat revenue estimates, they beat GAAP EPS estimates.
Significantly.
Absolutely. The headline numbers were pretty striking. Revenue surged, and I mean surged, by about 147% year over year. That landed at $8.4 million.
Wow.
And yeah, GAAP EPS was still negative at minus 12 cents per share. But that was actually a big improvement from minus $12.21 some artists a year ago, and it was much better than the consensus estimate. So moving in the right direction. And what about profitability on maybe a non-GAAP basis? Sometimes that gives a clearer picture of the core ops.
Exactly. And that's where it gets interesting. Their non-GAAP operating income from continuing operations, it actually flipped positive. $218,000. Compare that to a loss in Q2 last year. That's a pretty significant turnaround.
Definitely a positive signal. And gross profit.
More than doubled. Came in at $1.3 million. So strong top line, improving bottom line, more than doubled gross profit. Seems like a slam dunk, right?
You'd think. But you mentioned that market reaction.
Yeah, that's the head scratcher. Right after the call, the stock actually dipped. Briefly, but it went down.
Huh, weird.
Totally. But then almost immediately, like the very next morning in pre-market trading, boom. Big surge upwards.
So a complete flip. What did that tell you?
It suggests investors maybe had some initial jitters, but then they digested the whole picture. They looked past maybe one or two specific numbers and saw the bigger, longer-term growth story, the potential. It felt like a real repricing of the stock based on future prospects.
Okay, let's dig into what drove that massive revenue jump then. What was the main catalyst?
It was mostly down to one big thing. Executing and delivering most of a 25-unit eBoost order. This was for a large public school district out on the West Coast.
eBoost, that's their mobile EV charging solution, right?
Exactly. And this wasn't just any order. Management highlighted it as the largest RFP request for a proposal ever awarded for mobile charging, specifically for electric school buses. That's a big deal in that niche.
And it wasn't just volume, was it? Didn't they mention getting better at making them?
Yes, precisely. They talked about productivity gains and cost optimization on those units. So it wasn't just selling more, it was selling them more profitably. That directly fed into that doubled gross profit figure and suggests they're kind of hitting their stride manufacturing ring-wise.
Makes sense.
And on top of that big order, they also started shipping the first units for that new multi-year deal they have with SparkCharge. That one's potentially worth up to $10 million. So another solid piece of business starting to come through.
So eBoost is clearly the engine right now. But they're not just sticking with that, are they? They've got something new coming. HomeBoost.
Yeah, HomeBoost. This is a totally different direction for them, really. It's a power system for homes and like commercial buildings. Yeah. It uses a natural gas engine, but you can also add DC fast charging as an option.
So like a mini power plant for your house or small business?
Kind of, yeah. The idea is you can generate basically 100% of your own power, go off grid if you want. A private power plant, as they put it. It's a move into energy independence, not just mobile charging.
Interesting. But is it ready yet?
Almost. There was a slight delay. The CEO actually took responsibility, said they needed a bit more time for some electrical and mechanical tweaking. So the launch is now planned for late 2025.
Okay, so no revenue from that this year.
Right. Zero revenue expected in 2025. This is purely a play for 2026 and beyond. But management seems incredibly bullish on it. They called it the greatest avenue for us for growth. Sure. It massively expands their market, totally different playing field.
A big strategic bet then. Let's swing back to the financials. How are the margins looking overall? You mentioned gross profit doubled, but what about the margin percentage?
Right. So the overall gross margin percentage actually dipped a bit this quarter. It was 15.7%, down from 18.9% last year.
Any explanation for that?
They didn't deep dive into the why on the call, but they did say they expect margins to kind of stabilize, maybe even improve a bit in Q3 and Q4.
And long term?
Long term, they're aiming high. Target is 30% or more for overall gross margins. They see that coming as the eBoost service revenue grows. That's higher margin stuff. And once HomeBoost gets up and running at scale, that margin expansion story is definitely key for investors.
Okay, now cash. That's always crucial. How much do they have on hand?
As of June 30th, they had $18 million in cash. Now, that is down significantly from the end of 2024 when they had about $41.6 million.
Whoa, that's a big drop. Why? Was it operational burn?
No, and that's the really important point here. It wasn't operational burn. The two big reasons were, one, they paid out a huge one-time special dividend back in January that was $16.7 million right there.
Ah, okay. Returning cash to shareholders.
Exactly. And two, they had about $4 million in tax payments during Q2. So take those out, and the picture looks very different. It wasn't the business bleeding cash.
Got it. That context is critical. What about working capital?
Still strong, $24 million. So they have the resources to operate day to day.
Okay. And the backlog, I saw that was down sequentially. Is that a worry?
It was down 23% sequentially to $18 million. But again, context matters. It wasn't down because they stopped winning new business. It was down because they delivered on those big orders, like the school district one, which then came out of the backlog and turned into Q2 revenue.
Right. So fulfillment drove the decrease, not a lack of new orders.
Precisely. And looking forward, they actually reaffirmed their full-year revenue guidance for 2025. They're still expecting $27 million to $29 million.
Which is still solid growth, like 20% year over year.
Yep. They did mention that because Q2 was stronger than expected due to some early shipments, the second half might look a bit lighter compared to the first half, but the full-year target remains the same.
Okay, let's shift gears a bit. Investor context. How are they actually making all this stuff? Manufacturing strategy.
They use a mix, some in-house work, but they also rely on contract manufacturers, especially for big orders like that school district one. It gives them flexibility without massive capital investment.
Makes sense. Any plans to expand their own factory?
Not immediately, they said. Their Minneapolis facility seems okay for now. And interestingly, for HomeBoost, the plan is 100% outsourcing for manufacturing.
Keeps things asset light, smart.
Yeah, lets them scale potentially faster without building factories themselves.
What about market diversification? Is everything just California because of incentives?
A lot of the eBoost revenue is California heavy right now, yeah. But management basically said, look, that's where the biggest market and the best incentives are, and we don't see that changing fast. So lean into it.
But HomeBoost changes that calculation, right?
Totally. That's the whole point, partly. HomeBoost is designed for pure power applications, not just EV charging tied to specific state rules. It opens up the whole country, theoretically, maybe even internationally, for energy independence solutions, much less reliant on specific regional policies.
And the pipeline for eBoost, even with the California focus, sounds strong.
Oh, yeah. They described a robust sales pipeline. They're actively quoting projects for government agencies, transit authorities, big package delivery companies, shipping ports, a whole range.
Any particular area seem especially hot?
They specifically called out the robo-taxi market, said it was, and I'm quoting here, frankly, probably the fastest as far as response time now to POS.
POS, purchase order signing.
Exactly. Means those deals are moving quickly from discussion to actual signed orders. That's a fascinating signal about where demand is really accelerating in the EV infrastructure space.
What about competition? Who are they up against?
For eBoost, they mentioned some competitors have actually dropped out or consolidated, which helps Pioneer. Most of the remaining competition, they say, comes from battery-based mobile chargers. Pioneer sees their own generator-based tech as higher power density and less expensive.
So they feel they have an edge there. And for HomeBoost?
There, they see very little direct competition right now. They're really aiming for that first mover advantage. They even mentioned developing it somewhat stealthily to protect what they're doing.
Interesting. Anything else investors should know? Leasing data centers.
Yeah, they briefly touched on leasing. They're interested in growing that because it's, quote, much more profitable and offers a much higher return on assets. So a move towards more recurring revenue, perhaps.
Always good.
They also mentioned their small equity stake, about 6%, in their old switchgear business, Volterra, which is involved in data centers. But, and this is important, they confirmed their current eBoost units are too small for big data center backup power. That market still relies heavily on big diesel generators.
So sticking to their niche for now.
Seems like it.
All right, that brings us to our favorite segment, not financial advice theater.
Disclaimer time.
Yes. Seriously, everyone, this is purely for informational and entertainment purposes. It is absolutely not financial advice. Any investment decisions you make are yours alone, based on your own situation and risk tolerance. Please be careful.
Couldn't say it better.
Okay, disclaimer done.
Yeah.
But look, it's undeniable the market had that whipsaw reaction and ended up seemingly repricing PPSI as a growth story, right? Focusing on the future.
Yeah, the smart money, or at least the fast money, definitely looked past the immediate numbers towards that longer-term vision.
So with that in mind, let's throw out a couple of, let's call them outrageous but plausible hypothetical trade ideas. Just ways sophisticated investors might be thinking about this.
Okay, let's hear them.
Idea one, the residential renaissance volatility play. This is all about home boost.
The big unknown catalyst.
Exactly. Management calls it a key driver for 26 and beyond, a huge market expansion. If they nail it, if they really become the first mover in this private power plant space for homes, the upside could be, well, massive.
But if it gets delayed again, or adoption is slow, or competition pops up...
The downside could also be sharp. It feels kind of binary, right? Huge success or significant disappointment.
So this thesis isn't about picking a direction, it's about betting on volatility. An investor thinking this way might look at strategies designed to profit from a big price swing up or down as the market figures out what home boost is really worth.
Like a long strangle or straddle option strategy, maybe going out into 2026, betting on a dislocation.
Exactly. Betting on the size of the move, not the direction. Okay, idea two. The fleet electrification acceleration momentum bet.
This one sounds more focused on the current business. It is. It zeroes in on the proven strength of eBoost. They've got that strong pipeline, they're winning deals, especially in fast-moving areas like robotaxis, where they see accelerating demand and quick deal closures. Plus, they're getting better at improving those margins.
So this thesis is basically the core business is working, and it's going to keep working, maybe even accelerate.
Right. It's a bet that the positive momentum continues. An investor here might use a strategy that leverages that existing upward trend in the core e-mobility business, maybe something with a more defined risk-reward, profiting if the stock continues its climb, fueled by more eBoost wins and better margins.
Like a bull call spread, perhaps, capturing upside while capping risk and premium cost.
Could be. Again, just hypotheticals based on interpreting the signals. Both ideas, though, are really about looking forward, focusing on that growth narrative that the market seems to have embraced after that initial wobble.
It's all about that potential re-rating based on future catalysts, not just Q2 numbers.
Okay, so let's wrap this deep dive up. Pioneer Power Solutions, Q2 2025. Bottom line, a really strong quarter operationally.
Definitely. Huge revenue growth, that positive flip in non-GAAP operating income, driven mainly by great execution in the eBoost segment, especially that big school district order.
And then there's the future, the Home Boost launch coming later this year, which is clearly a massive strategic push into whole new markets for energy independence.
Yeah, and while you got to keep an eye on the cash position, remembering why it dropped, and understand the context behind that backlog decline.
Which was due to fulfilling orders, not losing them.
Exactly. Management's confidence seems high, and that quick positive market reevaluation really points to investors focusing on the long-term growth story here in this whole electrification shift.
It's a great example of how sometimes that first market reaction doesn't tell the whole story, isn't it?
Yeah.
You really have to dig into the why behind the numbers and the strategy.
Absolutely. Looking beyond the headlines is key.
Well, that's our deep dive on Pioneer Power Solutions. Hope you found it useful.
And one last time, this was for informational and entertainment purposes only. Definitely not financial advice. Thanks for tuning in.
We'd love to hear your feedback. Catch you next time on The Deep Dive.